What's up, team? Sean from Vesta Live here, and I have a question. Is there a way to invest in medical breakthrough companies in a consolidated, easy way? Well, the answer is yes. I'm going to show you an ETF right now that invests in medical breakthroughs, which sounds really great on the surface, but we're going to dive in a little bit and take a look at this and actually determine if it makes sense, if this is something that's even worth looking at. And look, team, as always, I'm not a financial advisor. I'm not giving financial advice or making a buy or sell recommendation here. This is just if you're looking for something like this for your portfolio, this is a good place to start looking at some research. And as always, I really appreciate a like and subscribe on the video. If you haven't done so already, thanks so much, team. So I don't want to waste any time. As always, let me share my screen and jump right on in here. So what we're talking about is the stock symbol SBIO, SBIO. And the full name here is the ALPS Medical Breakthroughs ETF. So what this really aims to do is take a little bit of a bunch of different companies in the medical breakthrough area and try to capitalize on explosive growth within them. Now, in theory, this sounds like it could work really well, but I think as we're going to see here, there's a lot of risk. I do want to also say, for full transparency, I own a very small amount of SBIO in my portfolio. I actually had to check because I didn't realize I still had it. I had sold some time back and never replaced it. This doesn't mean I won't, excuse me, this doesn't mean I won't add in the future. It doesn't mean that I won't add in the future. It just, as of today, I have a very small holding. I think it was literally a handful of shares, which my guess is I probably sold a lot in actual LOT, a lot, and was left with a couple still in my portfolio. So just wanted to call that out so everyone's aware of it. So current price is about $29.66 per share. The NAV is right on the money, right? We're looking at a daily return in the negative amount here. They have net assets of just under $100 million, or just under 95 million, I should say. There has been a NAV change a bit here, down about 1.46. We saw that already over here. Here's the part that's kind of the kicker, team, right? It's down almost 30% year to date. So this is why I want to take a look at this and determine, is there room for this thing to grow? Are we looking at this at the right time? Just trying to get a feel for what's happening here from an underlying perspective. And what's interesting here, and this is a little bit of a surprise, it does pay an annual dividend. Now, a lot of folks who are in dividend investing, they typically see them come on a quarterly basis or a monthly basis even. This is a once per year type of dividend. It's really looking out across the whole year, what's going to get paid out. There has been a pause in dividends for the past couple of years. I'll show you this later on in the video. But just to be aware of, if you hold this, there is some degree of expectation you might see a dividend. But as always, dividends can go away very quickly and easily. So in a nutshell, what I really want to call it here is that there's two things: the investment objective and the strategy. The objective of the ALPS Medical Breakthrough ETF seeks investment results that correspond, before fees and expenses, generally to the performance of its underlying index, the S Network Medical Breakthroughs Index, PMBI. So keep in mind, team, in the realm of professional investing, there are indexes that track certain things. ETFs oftentimes will try to build a portfolio to match the index and either work alongside it to maintain the same results or even have outpaced results. So there's usually some objective to do that around an index fund when you're building an ETF, okay? The strategy of SBIO provides exposure to small and mid-cap stocks of biotechnology companies that have one or more drugs in either phase 2 or phase 3 of the U.S. Food and Drug Administration, FDA, clinical trials. Constituents must have a market cap of no less than 200 million and no more than 5 billion. So just to take a quick pause here, if you're looking for like the true outliers, the very, very, very early stage, very small micro caps, over the counter type things, you're not really going to find them here. These are going to typically be equities that have worked through a couple of phases. They're working through trying to get approved to go mass market. They clearly have nothing under 200 million, so that does put a cap on how small these can even get. So just keep that in mind. Although it is breakthrough technology, it's also not pre-stage testing, okay? So just to call that out. Now, one thing here that I thought was really interesting is you can see here that this thing has not been doing great. There was a time where things were looking good. You're going to see this on another chart shortly here, where really there's an acceleration in underlying price. The dividends were coming on strong. And this isn't that old of a, excuse me, of an ETF. But since inception, what we're really looking at here is only, give or take, about 3.2% or so, right? So it's not even matching up against sort of where it's trying to, it's not even matching the index at this point. So a lot of things to be concerned with here. But again, the reason I wanted to talk about it wasn't necessarily how it's doing up till today. It's where do we think potentially there could be room to grow here if it does track back to what it was doing prior to the downturn we've seen in markets. Excuse me. So this speaks to it really well. Since its inception, if we had put $10,000 in, we could see that $10,000 went as low as, let's see here, somewhere around the $8,500 mark, all the way to as high as about 23,000, 24,000 or so, right? So where it's sitting today is somewhere in and around that range of about 13K. So from 20, I've got to lean in for my eyes here, from about halfway through 2014 to where we are today in 2022, it really isn't up all that much, but we've seen a lot of volatility in here. And I do feel for my own portfolio, this is something I want to take another look at. Now, again, I'm glad I didn't have it when it was up here. This might be a better time to think about it. However, I think we probably still see some more downside risk here. So if this is something that's in your portfolio and you're holding long term, that makes a ton of sense. If it's something you're thinking about getting into or for diversification, maybe make sure you have the right signals and the right signs that we're back on an upwards trend here, because it should be something you feel comfortable getting into, because there could be further downside as we've seen in years past. So just calling that out, right? Management fees are 0.5%, pretty standard for an ETF. I know it's higher than Vanguard, but 0.5 isn't necessarily the end of the world to me. I don't think that's anything unreasonable for what it is, such a specific type of ETF, right? That 200 to 5 billion, that phase 2, phase 3, having to decide and wait what's going to be in there. So just want to call that out as well. So just a couple of quick points here as well. We know the market price is just under $30. There's a slight downward trend in NAV change, net asset value. Year-to-date return is obviously terrible. But the reason why I'm looking at this, with that being said, is I'm trying to make a determination as to whether or not I believe there's upside potential that can come from this. So just calling that out. And again, we do have a total market value just under 95 million, right? There's 3.2 shares outstanding. What I think is particularly interesting here is the daily volume and the average 30-day volume. So this thing does not trade in a big way, right? Only about 8,800 shares on an average across a 30-day period, right? So just something to think about, that this is not widely traded. So sometimes what can happen is you'll see a spread between the bid and the ask that can get widened out if we don't see a lot of volume. I don't think that's a huge problem, but something to be aware of if you're buying on market and not on a limit order, okay? And again, here, I think this is a pretty neat call out that we don't always see in these videos. The dividend yield, assuming it pays, is 0.05%. And again, you're not holding this for dividends, so keep that in mind. It's merely just a tiny little bonus you might get. But just to call it out, there is some expectation there'll be something. And I thought this was really great that they called this out, because I think a lot of folks, when they're looking and researching an ETF or stock, don't take the time to understand the terminology, right? They actually spell this out down below, and I'm going to read it out loud for those who are just listening to this. The dividend yield is a financial ratio that shows how much a fund pays out in dividends each year relative to its share price. I think we all probably knew that. The 30-day SEC yield is negative 0.48%. That is reflecting the dividends and interest earned during the period after the deduction of the fund's expenses. Excuse me. And they have another version, excuse me, called the 30-day SEC yield unsubsidized. The idea here is the unsubsidized version reflects the dividends and interest earned during the period after the deduction of the fund's expenses, excluding fee waivers. So here we actually have the identical number of negative 0.48. And then the trailing 12-month yield is actually 0%. This is referring to the percentage of income a portfolio has returned to investors over the last 12 months. So team, if that's not obvious, I want to make it so. They have not returned any capital in the form of a dividend to investors in the past 12 months. That's why it's 0%. So we do have some key things here looking at risk metrics across the 3 years ending October 31st of this year. It's got a standard deviation of 29.66, Sharpe ratio of negative 0.02, and a Sortino ratio of 0.03. For the average investor, I know we don't pay a lot of attention to these things, so I don't want to go too wild into looking at these different risk metrics. What I want to call out is the Sharpe ratio and Sortino ratio are really looking at overall risk. So when we look at how well something does, it can't just be in terms of how high it goes up. It has to be the risk of how low it can go as well. So that's what these things are trying to measure, essentially. Excuse me. Now, the thing that I do like personally about this is it does give me a lot of exposure to companies that I otherwise would not have in my portfolio. All that being said, I realize it's getting hammered year to date. I realize there's been issues with the dividend. So this is a very risky play for me. It's just, if I have no exposure to the space, I'm looking for some, it might be something I include in my portfolio. But again, as I said, I did have it and I have since sold it, and I have no near-term intention to go back inside. So here's how the portfolio really breaks down. They've got about 99.83% in healthcare, 0.11% in consumer non-cyclical, and you'll see like a negative 0.04 for cash equivalents. This can happen sometimes when the numbers get a little bit wonky. So just sort of almost like a margin of error, so to speak. Now, the geography breakdown is really interesting, right? It's about 79% in the US, 4.13 in Ireland, 3.92 in Denmark, then Canada, Switzerland, Great Britain, China, Belgium, and so down we go. Now, one thing to keep in mind is there's a lot of reasons why, of course, you might see one jurisdiction over another. Could be based on funding, based on taxes, based on raising capital. It could be based on who's approving what and where it's easiest to get things approved. But again, typically this is going to be very heavy, almost 100% in healthcare, of course, that makes sense. And a large percentage in the US and Ireland. That actually makes a ton of sense to me as well. So nothing too surprising here. And you can always click through and drill into these things as well. Now, what's interesting is we can go into the details here to understand the top holdings and then all holdings. So there are a lot of holdings in this, but I just want to kind of talk through the top couple here. So the first couple are KRTX, or the Karuna Therapeutics Inc. Stock, right? This is healthcare biotechnology based in the US. That has a weighting of 4.28%. We've got the ASND, Ascendis Pharma, based in Denmark, again at 3.92%. We've got Ionis Pharmaceuticals, IONS, Ions. It's a US company, 3.49% there as well. Then we sort of go into Cerevel Therapeutics, CRISPR Therapeutics, Alkermes PLC, excuse me, Intellia Therapeutics. I need therapeutics for my cough here. Arrowhead, Cytokinetics, and Mirati, right? Those are the top 10. So just to call that out, you can easily go in here, do the research on each of those on your own, search what they're doing, where they are, what their market caps might be, where they are in the phases, and then you can even go deep into seeing all the holdings within the fund. And I think really, if you're serious about putting a large amount of money into anything, there's good reason why you would want to know and understand all the different components that are in here and what those components look like in and of themselves. Because you can always decide to cherry pick, and rather than use an ETF, pick the individual equities that you prefer or like better. Of course, that brings on a different degree of risk naturally. Now, the piece on the distributions, right? Super interesting. The current year, of course, as of the X date of 12/22 and a record date of 12/23, so we're talking December, with a theoretical payment date of 12/29, we have no known dividend announced just yet, okay? And looking at previous years, we saw no dividend in 2021, no dividend in 2020. We did see a dividend in 2019 of 0.015 cents per share. Excuse me, in 2018, we actually saw a nice dividend of 0.78 per share. And even in 2017, it was 0.57. And then before that, it was zero. Before that, it was zero as well. So I just want to really reiterate the thought here that this is not a play for income or a dividend. That would be merely a bonus, assuming things went well otherwise. And then, of course, for anyone who's looking at this, there's fact sheets, there's thematic investing information. You can really go into the weeds here as far as what these other things are. Jump into the brochures, take a look at different funds that are inside of it, and get a feel for sort of the ALPS advisor firm here to see what they're up to. So that's what I want to talk about today. I got a couple of really good questions around healthcare. How do we look at the majors versus the minors? How do we understand the breakthroughs versus how to decide which one to pick? So I think there's a ton of really good ETFs that sort of really speak to the large healthcare biopharmaceutical space, but not a lot of folks are familiar with sort of the breakthrough space, that lower tier of companies that exist out there. So again, I want to really stress this. This isn't meant to be advice. It's not meant to be something you should go out and buy. But if you're interested in it, this is where you should now take over the research for yourself. With that, team, thanks so much for watching. Good luck out there. And let me know, is this something you would consider buying, or have you bought it before in the past? Thanks, everybody.